What's up, Facebook? Ty Crandall here with Credit Suite, and today we're diving into business credit. We're going to be talking a little bit more about why you want business credit, why you should have business credit, the benefit it provides you, and how by not having it, it can really be problematic for your business. So a lot of people have been asking about this. What exactly is business credit? How exactly does this work? And why does it matter? Why is it something that I should actually want to obtain? So today I'm going to dive in. I'm going to answer those questions that we've been getting to talk a little bit more about some really cool things that business credit can do for your company that you may not know about now. So it's estimated that about 90% of entrepreneurs know nothing about business credit. And when we survey people that come into our database and get information from us about business credit, we find that about half of the people don't know much about business credit at all, and the other half have tried to build business credit and failed. So on our live streams, we're going to kind of go through that. We're going to eventually here, we'll get back into mapping out the steps of building business credit, reviewing business credit reports, those type of things. But for this stream, I want to talk a little bit more about how business credit's important, the things it can do for you that you may not know that it can do, and problems it can solve that you may be having now that you may not know it can solve. So that being said, let's go ahead and take a look and see exactly why you would want to have business credit. So business credit provides a ton of different benefits, as you can see here, and there's probably more than 12 that we're going to walk through that you may or may not know about. Before we dive in, let me kind of give you my really quick overview of what business credit is. So you're obviously familiar with your consumer credit, right? It's just a credit report that's linked to your social, that's linked to you as an individual. What you may not know, good morning, Andrew, welcome, is that your business has an EIN and it has its own credit report that's linked under this EIN. So this seems like a really difficult concept for some people to understand. They think it's a scam. They don't think business credit's legitimate. But it's as legitimate to have a credit report for your business as it is to have a credit report for you as a consumer. As a matter of fact, the oldest business credit reporting agency, Dun & Bradstreet, has actually been around about 70 years before the first consumer credit reporting agency. And Experian and Equifax, which you're familiar with consumer credit, are also involved with business credit. So business credit reporting is done with all three of these. It's absolutely legitimate. As a matter of fact, this is how all the big companies get credit lines and loans without their owners guaranteeing their personal credit report. So we often talk about this. You think, the CEO of Coke is personally guaranteeing their loans. It's kind of laughable if we think about it, but it's possible because Coke has its own credit report, right? Walmart has its own. Publix down here, one of the biggest privately owned companies down here in Florida, has its own. What you might not know is you can do exactly the same thing. You don't have to be big to get this, you just have to know the steps, and we'll talk about the steps in our future live streams as well. So what we're talking about is why you would want to do this. I mean, why would you want to build a credit report under your business that's not linked to your personal report? Well, a lot of different reasons. First of all, there's no impact with business credit on your personal credit reports. Now, this really means a few different things. First of all, there is no reporting of accounts for your business on your personal credit report and no inquiries. So if we look at how the FICO score works, here is your FICO score, right? Payment history, 35%, utilization, 30%, length of credit, 15%, new credit, 10%, credit mix, 10%. So hello, Teresa, welcome. I appreciate it. You're my business credit hero. You're awesome. Thank you so much. Edgar, Tamara, welcome. Thank you very much for coming in. So this is how your credit score works. Well, when you use your personal credit report to qualify for business credit cards, well, first of all, you put a new inquiry on your credit report, adversely affecting the new credit aspect of your score. But more damaging is when those credit cards, like a Capital One Spark card, report on your consumer credit report and you start to use them, you adversely affect your utilization, which is 30% of your FICO score. So if you're getting accounts, even business credit cards that report on your consumer credit report or require a personal credit poll to get approved, it adversely affects 40% of your consumer credit score. So one of the of business credit is that first, it doesn't require a consumer credit pull. You can actually get approved for very high limit accounts for your business regardless of personal credit quality because there's no personal credit check. You're ultimately leaving your social security number off of the actual application. You force the credit issuer to pull your business credit instead. They make the approval decision based on your business credit quality. Guys, this is the way it's supposed to be done. Your business isn't supposed to be able, your personal life isn't supposed to fund your business. It's supposed to be the opposite way. Your business can fund itself, but not if you keep giving people your personal social security number. So when you apply for a business credit card and you leave your social off the app, they pull your business credit report, and if you have some credit accounts established, you can then get approved for very high limit accounts. Now, the nice thing about this is two things. First of all, there's no inquiry. There's no inquiry on your personal credit report because you're not giving them a social. They're not even looking at your personal credit report. Two, the account won't report on your consumer credit report. So you could max the credit card out and it won't drop your consumer credit score 1 point. Whereas if you maxed out a credit card that reported to your consumer credit reports, you could easily drop your scores 50 to 100 points. A perfect example here is a Capital One Spark card. Capital One, you go in, you give them your EIN, you give them your business revenue, they give you a business credit card, then they report it to your consumer credit reports. So how is it any different than a business or a consumer credit card? Not much. They require an inquiry for approval. They report it on your consumer credit reports. And if you use the card, you will drastically lower your credit score. So that's what you want to stay away from. With real business credit accounts, there's no inquiry. They report to the business credit reporting agencies, helping you build business credit, helping you truly separate your personal credit. Now, if you don't think that's important, it's a pretty big deal. We've got a link on our website called creditsuite.com/legit. And this is actually a look at our page right now. And when we go to creditsuite.com/legit, we'll see SBA, Entrepreneur, Experian, Forbes, NASDAQ, Inc., QuickBooks, USA Today, Score, again, NASDAQ again, Equifax, Investopedia, Business.com. All these guys talk about the exact same thing. Why your business should have its own credit score. Why you should separate your business and personal credit. Very important because your consumer credit was never designed to fund a business. Your business was designed to fund itself using corporate credit. So with business credit, one of the big benefits is that there is no impact on your personal credit report. It doesn't report on your consumer credit report, so you can utilize those cards as much as you want without having an adverse effect. There's no consumer credit pull and there's no inquiry because you're not giving them a social when you apply. Now, another huge benefit here is that there's no personal guarantee. What that simply means is it means you're not liable for what happens that actual account on the personal side. So let's say you have a credit card account for your business, and let's say you personally guarantee it, and let's say anything happens, right? Economic crash, a million things happen, and you default on that credit card. Well, if you provided a personal credit check and a personal guarantee, which, by the way, if you want to know if you have a personal guarantee, if you gave them your social, you have a guarantee. But when you don't have a personal guarantee, you're not personally liable for what happens for the business. So that means if you ever, for example, default and they ever come after you for your assets, they can come after the business assets, but they can't touch your consumer assets. The problem is, if you personally guarantee, they'll wipe out your bank account. They'll wipe out your stocks. They'll take any assets you have on the personal side to cover the business debt. That doesn't make any sense. I mean, we're owning businesses, and for the most part, to make sure that we've got financial stability for our family. It doesn't make any sense to put your financial or your family in harm's way. And every time you provide a guarantee, you're doing just that. Now, don't get me wrong. In the beginning, when you're starting a business, you may not be able to get loans without a personal guarantee, but you can still get $10, $20, $30, $40, $50,000 individual limit credit cards easily without a personal guarantee, and it's an automatic approval decision without even a manual underwriting process. Kind of like consumer credit cards, right? You go in, you apply for the credit card, you get an immediate approval. A week later, you get the card. It's the same way in the business world. You could do this without the personal credit check and without the guarantee, and if you ever do default, you're not personally liable. It separates personal and business credit. It separates your personal and your business liability, which, as I showed you, is why NASDAQ, Inc., all these guys really talk about the importance of business credit. So another huge benefit of business credit is that it's super fast to build. Super fast to build. So if you're looking for money quickly, well, business credit definitely, without a doubt, provides you an easy way to do this. And just so you know, I don't think I'm getting a lot of my comments and stuff on Facebook, which sometimes that happens. So for some reason you post a comment and I don't respond, it's because I'm not getting it. But what I will do is I will go to this video once it posts and make sure I didn't miss any and respond. So you get it very, very, very fast. You can get vendor credit, which are credit accounts that are used to start building business credit immediately. I mean, the minute you know the steps, you can immediately get this credit. You can get store credit accounts with really high limits in about 60 days, and you can get fleet credit cards, cash credit cards, Visa cards, MasterCards, cards you can also use for auto expenses, also auto vehicle financing in about 120 days, way faster than FICO. So if we look at a consumer FICO score, FICO requires 6 months of you having credit reporting to even give you a score. In the business credit world, your scores are just based on payment history. If you pay your bills promptly or on time, you get a good score. So all you have to do is get some accounts that report to Equifax, Experian, and D&B, pay them as agreed, they give you a good score, and that good score you're using to start getting really high limit revolving accounts. And these are all real approvals of people that follow us here on Facebook and Periscope. So you're getting, $20,000, $15,000, $40,000 approval, $35,000 Amazon credit cards. You're getting this kind of credit in about 90 days building business credit. So you get vendor credit right away. Actually, if you have good personal credit, you can get business credit that has a personal guarantee initially to build your business credit right away as well. That credit you can get up to about 150 grand in unsecured financing, no doc. You can get it as a startup. You don't need collateral. You don't need tax returns or bank statements. This does require a good credit score for approval, 685. And you can get this right away and cash out. I mean, you can get $150,000 in physical cash at 0% for 6 to 18 months. Super awesome program. If you have good credit, want to know more, then just go to creditsuite.com/get funding. We can get you approved. But even if you don't have good credit, you can still get vendor credit right away as well. Then, once this credit reports to the business credit reporting agencies in about 30 to 90 days, then you can start to get high limit store credit card accounts like I just showed you, $20,000, $30,000 Dell, Amazon, etc. Then you start to get Visa cards, MasterCards you can use anywhere right after. So this is the fastest way that you can get money for a business if you can't get a loan. If you have consistent cash flow now, if you have some kind of collateral now, if you have good credit, you can get money to fund your business through a loan or a credit line right away. But if you don't have one of these, business credit becomes one of the fastest alternative ways to get money. Now, another benefit that I just kind of hit on is that you get really high credit limits. So SBA says that business credit limits are about 10 to 100 times higher than what you're going to find with consumer credit. Okay, and you'll find that by even just looking at some of the limits you get. You may probably never have had a $40,000 limit credit card. Some of you have, most of you probably haven't. Okay, before the economic crisis in 2008, 2009, you really didn't see limits. You used to see limits that high. You don't really see a lot of them now. With Dodd-Frank, we see limits reduced about 15% from what they once were. But look at some of these approval limits. I mean, $8,000, $4,500, $3,500. These are very quick in 60 days. You're talking about 90 days getting to $12,500, getting to $15,000, getting to $40,000. Okay, getting the $35,000 Amazon card and $25,000 WEX credit card. You're getting this credit very quickly. And the limits are obviously much higher than what you'd find on the consumer side. It almost seems unreal to get a business credit card with the limit of 30 grand without a personal credit check. But if you think about it, it makes a lot of sense. You're never going to need to buy $40,000 worth of Dell computers for your home, ever. But you could easily need to spend $40,000 for computers for an office. Remember, one of the core components of credit is called capacity. And when it comes to capacity, businesses have a much greater need for higher capacity than consumers do because we spend a lot more in businesses. This is why limits in business credits with business credit are so much higher than consumer. And this is also why you can't use your consumer credit to fund your business. It's not designed to do this. The limits are much smaller than commercial credit. And the problem with that is that you could easily put balances on there that are much higher than you should be, plummeting your personal credit scores. Consumer credit was not designed to fund a business. This is what business credit or corporate credit's for. And it's also why the limits are so much higher on business credit than consumer credit, because we know that you need more credit to fund the business. Now, again, for some reason, Facebook sometimes does this. I'm not getting a lot of comments. I'm not getting a lot of the things coming through. So for some reason you comment and I'm not responding, it's because I'm not seeing it. I will reply to this video once it posts if you are actually putting a comment in, I'm not responding to. So another cool benefit of business credit is that basically you can get approved when you can't get a loan. You don't need cash flow. Credit doesn't matter. Collateral doesn't matter. You can get it even as a startup. So guys, look, if you ever want to get a business loan, I call this the 3 C's of lending. I actually just saw an article from Forbes that actually came out with exactly the same 3 things. You're the best. Joel, thank you very much. I appreciate that. Thank you guys for the likes. Thank you for the shares. Thank you. It lets me know I'm on the right track. So if you want any kind of business loan, first, you need all 3 of these at a bank. But if you want to go to an alternative lender like On Deck or one of the thousands that are out there, you need one of these 3 strengths. You need cash flow, you need good credit, or you need collateral. What happens if you have none of these? Kimberly, thank you very much for sharing. I really appreciate that. And 12 others shared. Thank you guys. That's awesome. What if you have none of these? What if you're a startup? You have less than $5,000 in revenue, your credit sucks, and you don't have any kind of collateral. Well, then you can't get a loan. Nobody's going to give you a business loan. But you can still get really high limit credit accounts for your business using business credit. So business credit just simply provides you a financial solution when you have no other. You can get the money really quick. You can get a ton of money. I mean, $100,000 in 6 months or less, and well over $100,000 if you want more. And you don't need a lendable merit like you do business loans. So another huge benefit of business credit, you can get it as a startup. Your credit doesn't matter because there's no credit pull. You don't need collateral and you don't need cash flow. It's a catch-all. Anybody can get it, even as a startup, even when you have no lendable merit. Now, another huge benefit of business credit is that it doubles your borrowing ability. So as I showed you in the beginning, your business credit report is linked under your EIN. Your consumer credit report's linked under your social. Business credit's the only legal way you can have 2 credit profiles, right? You can't use CPN numbers and that bogus crap because then you're ultimately just using somebody's stolen socials, what ultimately happens in a lot of cases. It's not legit. Okay, but you can build a credit profile under your business and have 2 credit profiles. It's the only legal way to do this. So what happens is, let's say you go into Staples, right? And you get a consumer credit card today. If you go back into Staples tomorrow, they're not going to give you another consumer credit card. And Tamara, Lindsay, thank you very much for sharing. Kimberly, again, thanks for sharing. Anybody else that shared that hasn't shown here, thank you very much. But if you go into Staples and get a consumer credit card today, then tomorrow go in and get a commercial credit card, they would approve you. So again, you can have a Staples credit card here and here, an Amazon, a Dell, the Visas, the MasterCards. It doubles your borrowing ability because it gives you 2 credit reports and scores, or 2 credit reports and a lot of different credit scores. So business credit also increases the value of your business, and it also gives you a competitive advantage. So if you think about this, first of all, if you were going to buy a business and there were 2 businesses to choose from, one business, they were the same in every way, but one business had access to really high lines of credit, the other one didn't. The other one had a great credit score that you knew you could immediately use that business credit profile to go out and get $20,000, $30,000 credit limit accounts. Which would you pay more for? Obviously, anybody would pay more money for the company that had the higher credit limits and more access to credit. Okay, so it really increases your value, and this is one of the things that potential investors, venture capital, all these guys look at. So for example, if you ever watch the show The Profit, which I love, Marcus Lemonis on one of his shows had a company where the guy was kind of sketchy and there were some things he wasn't sure of were being accurate or not. He pulled the company's business credit report and using that business credit report decided not to invest in the business. So guys, your business credit report's very important because first of all, by having established business credit, it increases the value of your business and it also gives you a competitive advantage. If you have access to $100,000 and the other company in your industry next to you has access to no money, you obviously have a huge advantage because you have access to $100,000 to fund your business, they don't. So it gives you a huge advantage and it also helps with evaluation of your business. Now, business credit also makes you more lendable. Actually, it's not just that it makes you more lendable. There's things that business credit does. And I'll pull up a business credit report and show you one right now to give you an example of what I'm talking about. So business credit does three things when it comes to loans. First of all, it helps you get approved. A large part of approvals are based on your business credit quality. If you have established business credit, then you have a much better chance of getting approved for a loan. If you don't have established business credit, then you have a good chance of getting denied for a loan. Okay, it also determines the rates and terms you'll pay and how much you'll get approved for. Here, I'll show you. So this is a commercial credit report from Experian. I'll show you a few of them so you can see. So this credit report, this is a credit report right from Experian commercial, and you can see right here, credit limit recommendation. Guys, this is when you apply for a business credit card or a loan and you want to know how they make the decision of how much they approve you for, right here's part of it. The business credit reporting agencies clearly say how much you should be approved for. Here's another report. This person's being recommended for $1,900, this person's $1,400. So here's the question. Who would you rather be? The one that's recommended for $1,400 or this one that's being recommended for $13,000? Okay, so it's very important to establish your business credit because your business credit quality will determine if you get a loan or not. Your scores will come into a play when it comes down to whether you're going to get approved or for a loan or you won't. And the credit reporting agencies say how much you should be approved for right on the credit report. So people that are pulling your credit report are making lending and credit issuing decisions based on how much the reporting agencies are saying you should be approved for. And your credit score quality also determines your risk, well then also determines the rates and terms. So when it comes to business credit, it's really important for loans for three reasons. One, it determines if you get approved for a loan or you don't. Two, it determines clearly how much you'll get approved for. Your credit reports even say how much money they should be giving you. And three, it determines your rates and terms. If you have a bad credit score, you are not going to get as good of a rate and term as you would if you had a good credit score. It's no different than consumer financing, right? You can get a car loan with crappy credit. You can get a car loan with great credit. The difference is a car loan with great credit is going to be a 0 to 5% interest rate, and an interest rate, if you have bad credit, could be 15% to 25%. Your payment can be almost double with bad credit versus good credit. It's exactly the same thing in the business world. So if you ever want to get a loan, then you need to build your business credit because it determines if you'll get approved, the rates and terms you'll pay, and how much you'll get approved for. If you can't get a business loan, then you need to build business credit because you can still get high limit business credit accounts even when you cannot get any kind of business loan. So another benefit of business credit is that anybody can see your credit reports. So I just kind of showed you that, right? Look, I do this from time to time. I'll come onto live Periscope and Facebook, ask for people's business name, and pull credit reports just to show how easy it is to get. Anybody can access your business credit reports. As a matter of fact, if you go in to get credit monitoring with a place like Dun & Bradstreet, which I'll see if I can pull that up right now, then what you'll find is that they even give you the option of pulling credit reports for other companies, okay? So it really matters because what happens is if you don't have established business credit, anybody can see your business credit reports. And I'm going to pull this up right now just to show you exactly what I'm talking about. So it's important because anybody can see your business credit reports. We're not used to this. What we're used to is we're used to people needing our permission to pull our credit reports, right? We're used to needing our people needing us to sign off, give them access to our social to pull our business credit reports. But that's not how it works in the commercial world. In the commercial world, it's very, very, very normal for you to be able to come in and get credit reports on anybody that you want to get credit reports for. Here, I'll show you. So I'm on Dun & Bradstreet's websites right now, and look at it. Manage my business credit. There's some options. Look at the next column. Monitor another company's credit. And then they give you multiple options to receive a one-time report. Get continuous real-time access to another company's credit profile. Access credit limits from the credit profile. Get a credit report on a U.S. company. Guys, this is legit. I mean, here it is. So anybody can get your credit report. You can see right here, boom. They can get continuous real-time access to your company profile. Let's look at this and see what this is. And Joel, I appreciate that. I think it's powerful too. And Michael, thank you very much for sharing this. So here we go. Evaluate the risk, reduce your risk exposure, identify potential financial instability. So the bottom line is, guys, is that anybody can come in and monitor your business credit report if they want to. You see that clear as day. Let me see if I can go back to where I just was. So you can see that clear as day, that you can come in and easily monitor another company's business credit report. So this is why you need to build business credit. Now again, on my live streams from time to time, I come in and pull reports just to show how easy it is. Do you know what somebody needs to pull your business credit report? I'll tell you, it's one thing and one thing only. Your business name. That's it. The only thing somebody needs to pull your business credit report is your business name. That's it. They don't need your EIN. They don't need your name. They don't need anything. They just need your business name. But if there's other companies with similar names to yours, having the city and state that you're in will help identify which of the multiple companies that come up that they actually are looking at. So if I pull up ABC Company and there's a bunch of them that pull up, knowing that you're in Memphis, Tennessee helps me know which one of ABC companies you are. But with only your name and sometimes your address, if there's a bunch of companies with a similar name, anybody can pull your business credit report. Think about that. Pretty scary. Your competitors, your prospects, your clients, potential investors, potential people that may buy your company, your relatives, anybody that wants to can pull your business credit report. And obviously suppliers, credit issuers, and lenders are. Obviously they do. Okay, they have access for ridiculous amounts. Okay, Experian does not like that we're in business credit and helping companies build business credit. And we used to have access to pull reports with them. When we pulled reports, it cost us $7.95 to get a report. So not only is it easy for anybody to get business credit reports on you that wants to, but guys, it's less than $8. It's really cheap for companies to get business credit reports on you as well. So you want to control your business credit quality because anybody can see those reports, especially lenders, credit issuers, and suppliers that are making lending decisions. So let's wrap this up. A lot of different reasons you want to build business credit. First, there is no impact on your consumer credit report. Business credit only reports to the business credit reporting agencies, not the consumer reporting agencies, which means that your business credit will populate on your business credit report, not your personal report. You could max out your credit cards, for example, if you wanted to, and you would not at all affect your consumer credit score because all the credit reports on your business credit report. Plus, there's no inquiry on your consumer credit report because there's no consumer credit pull. And since there's no consumer credit pull, then that also means that your consumer credit quality doesn't even matter. Your consumer credit score could be 350 and you can still get business credit. Now, Denise says, how can I pull my business credit report? Go to creditsuite.com/reports. creditsuite.com/reports, and you can get reports with all three reporting agencies right here. You can also do a free search to see if you have a credit profile right now. By only entering your business name and phone number, you can do a free search with Dun & Bradstreet, Equifax, and Experian to see if a report even exists. If it does, it's worth pulling your report because Equifax and Experian will give you a low score. Even if you have no trade lines reporting, they'll give you a low score. So especially with these two guides, if something pulls up on your free search, it's worth pulling your report because you can get a really bad score even if you have absolutely no credit reporting. No problem, Denise. So make sure you take a look at that. So another benefit, no personal guarantee. You're not liable for any business credit accounts you get if you ever default. It won't come on your personal credit report, and they can't come after your personal assets. Business credit's really fast to build. You get vendor credit immediately. If you have good credit, you can get Visa cards, MasterCards, cash credit immediately. You get store credit in about 60 days, fleet credit, cash credit cards, auto vehicle financing, all of which requires no personal guarantee or personal credit check. You can get in about 90 to 120 days. You get really high limit credit accounts. SBA says it's about 10 to 100 times higher than consumer credit. These are real approvals of people that keep us informed of what they're getting approved for, and then we pull business credit reports to verify it. 15 grand, 20 grand, 16 grand, 40 grand, $35,000 Amazon accounts, 25 WEX, 40,000 Dell cards. Visa cards with $10, $20, $30,000 limits. Very high limits you get very quickly on business credit. Remember, businesses have a greater need for higher capacity than consumers. This is exactly why you can't use consumer credit to fund your business. If you are, you'll ruin your consumer credit scores. Anybody that's in credit repair or knows credit will tell you this. But by getting high limit business accounts and getting accounts and using credit to fund your business that shows on your business report, not your consumer, makes a huge difference, because then you leave your consumer credit alone, you keep your consumer credit scores intact, you put your high limits on your business credit report, and you truly separate your personal and your business liability. I do, because I have net 30. Denise, that's exactly why you should pull your report. What's an example of a vendor credit? Uline, Quill, Gimplers, Monopolize Your Marketplace. All of these are vendors. Vendors are people that will give you net 10, net 20, net 30, net 60-day terms, and they also report the credit to the business credit reporting agencies. And Denise chimed in and helped with that as well. Thanks, Denise. Another huge benefit of business credit that we talked about, you can get it as a startup, even if you just started your business today. You don't need collateral, you don't need cash flow, and credit doesn't matter. Bottom line, you can get it when you can't get a loan. When you cannot get a business loan, you can still get these kind of approvals quickly using business credit. Okay, so that's one of the huge benefits of doing so. And Michael says, Granger, I appreciate that. I would say Quill, get off the phone with them. This AM, they have criteria that newbies may stumble over. Quill is one of the easiest to get approved for, but if you stumble, then place 3 orders, and on the 3rd order, they will approve you. Go to Quill, buy $50 worth of stuff, and then what you can do is you can turn around, and then if they deny you, then apply it, buy your $50 worth of stuff, come back, apply again, and on the 3rd time, they'll typically approve you. So another benefit of business credit is that it doubles your borrowing ability, because again, it's the only legal way to create 2 credit reports. One for your business, keep the one for your consumer. Because of it, you can build a bunch of credit on this report as you are, a bunch of credit on this report as you can, and that doubles your borrowing ability because it legally gives you 2 credit profiles. Another benefit as we wrap up is that it increases the value of your business and gives you a competitive advantage. Again, if you could buy 2 businesses exactly the same, one had access to $30,000, $40,000, $50,000 credit limits, one had access to none, obviously the one with access to higher credit limits would be of more value, and having access to money gives you a huge competitive advantage. What credit card company will easily approve without a PG? Well, a lot of them will. Everyone will. Name one. Visa, you can get Visa cards, MasterCards, you can get BP, Chevron, Sunoco, Costco, you can get Amazon, Dell. Almost every major retailer offers personal business credit without a personal guarantee. Visa cards, MasterCards, Amex cards without a personal guarantee. Auto vehicle financing, fleet credit. Fleet credit gets you access to accounts where you can buy fuel, you can do auto maintenance, you can do auto repairs for your vehicle or a fleet of vehicles. All of them will do it without a personal guarantee. It's just stepping up to get the ones that will approve you. You start with your first 5 accounts. If you have good credit, you get the unsecured business financing program I talked about. You can go to creditsuite.com/get funding to get it. If you don't have good credit, use Uline, Quill, Gimplers, Granger, as Michael said. Those are starter accounts. Once you have 5 accounts, then you can start getting approved for store credit cards with very high limits. And when you have about 10 to 15 accounts, that's when most fleet credit card and cash credit sources will approve you. So hopefully that helps you. Thanks, good stuff. American Express used to, but now they still need a PG. You can get Amex without a PG, but it's not easy to do. And that's why I don't talk about Amex a lot. Amex is one of those that will want you to be in business for 3 years. They will want $1 million in revenue. They will want you to have some heavy employees in order to get approved. And guys, that's the important thing to note, is that your business credit reports have on it a lot more than just trade lines, right? If you look, your business credit reports will say, here's the sales, here's the revenue of this business, $2 million. Here's the number of employees right here. Here's the SIC codes that they have it associated with. Okay, so your business, well, that kind of cut out. Your business credit reports have a lot more information on it that will be used for places like Amex. Amex wants to see that you have $1 million plus on your report in revenue. They want to see you have a higher number of employees. They want to see that you've been around longer, okay, that you've been in business longer. So Amex will approve you without but you've got to be really well established to get approved. If you're not, they will not approve you. And that's why I don't mention Amex a lot. Most people just don't meet that criteria to actually get approved. Quill approved me on the first try, and I did it through their website. They approve most people, but I actually see a lot of people get denied as well. That's why I say if you place to 2 or 3 orders, you'll get it. Same here, Joel. Which site is there, Ty, for Michael? Say that again. Yeah, I don't know what site you're asking about, but if you ask me that question, I'll let you know. Another benefit of business credit, as we talked about, it makes you more lendable. Anybody can see your business credit reports. I'm bringing both those into the same point to go back to a credit report. Remember, your credit scores are going to determine the rates and terms you pay. Your credit report says the amount of credit that's being recommended. And if your business credit is bad, you will absolutely get denied. Okay, most lenders. No, I'm going to say about all. Okay, about 97% of lenders that issue business loans and credit pull your business credit reports. They won't tell you that because they don't need to. The Fair Credit Reporting Act, for example, has a require with consumer credit that if you're ever denied, that you're going to get denied because you get denied. They have to notify you in writing that you got denied and which reporting agency they actually used to deny you. There's no such requirement in the business world. They pull your business credit report and deny you based on it all the time, and you never know they do. Here, you've probably heard of On Deck, right? They do merchant cash advances, 20%, 30%, 40% interest rates, 50% interest rate loans, really high risk. Here, I'll even show you. Here's an actual denial, and I'm going to try to cut out the lender. Here's an actual denial from On Deck. Okay, we're disappointed. Okay, we're disappointed to report we're not able to approve your client for the following reasons. Here's the reasons. Below business credit required score. Okay, so here you go. You can see below business credit required scores. So again, guys, your approval and denials are taking into account business credit. Even alternative lenders that focus on really high risk, they still look at your business credit to determine your approval. So it's being used, and if you don't build it, you can easily get denied. We see people get denied business credit just because they have no credit reporting and have a low score. And this is something you need to know is possible. So what can happen with business credit reports? And let me see if I can pull up some credit reports to give you an example. What happens with business credit is Equifax and Experian will give you a low credit score just because they know your business exists. And they do this because they will populate a credit report for you based on only one thing, which is called demographic information. So if they know your business exists, and I'll show you how I can tell. So I just opened up a bunch of different business credit reports, right? And I can tell this person has no credit for a reason. Because anytime I see a 27 to 29 score, okay, and a credit limit recommendation of $1,000, I know I'm looking at a credit report with no credit. So here's a company that has a credit score, right? You see it. Here's a profile. They have a credit report. They have a credit score. They're being recommended for only $1,000 worth of credit. But look, if we stroll down, we don't see anything. There's no trade lines. This is the end of the report. We see zeros across the board. There's no credit here. So this is a company that has no credit. They're even telling us the reason their scores are low is because of lack of trades. So what's happening here? What's happening is that they don't like the SIC code, and they don't like that you're a newer business with few employees. So let's see. So they don't like fine arts schools. That's not very nice, Experian. Who doesn't like fine arts schools? Experian, scumbags. So, here we go. They have an SIC they don't like. I don't even see employees here. But because they don't know the employees and they're not comfortable with the SIC, and since there's no trades, they're giving somebody a failing score with no credit. Man, that's insane. Think about that. Think about being issued a 350 consumer credit score when you have no credit on your report. That's what's happening here, guys. If you have no credit and they know you exist, then they will populate a credit report as you're looking at and give you a failing score. So how bad is this score? Well, if we look at D&B's score, a 28 means you're paying about 4 months behind. So, that's how bad your score is that your score is the equivalent of you just defaulting on every single obligation you have. So that being said, it's very important. You have to build your business credit report because it's being looked at by lenders, credit issuers, and lenders. We've seen $3, $4, $5 million revenue businesses get denied for $10,000 credit cards because of what you just saw there. They don't have bad credit. They have no credit, but they're being given bad scores. So Dun & Bradstreet needs 3 accounts reporting to them to give you a score. But Equifax and Experian need one account reported, or they need what they call demographic information to populate a report. How do they get demographic info? Utility companies, also your Secretary of State. So when you file your annual report every year, they get that information, they populate a report, they give you a crushingly bad score, and then your ability to get loans and credit is ruined until you get good credit after that. The good news is that it only takes one account to fix it. It only takes actually one account to then come in and get good credit scores, because even one, and I'll see if I can pull up an example of that, because even one credit account can give you a good score and offset the bad. So it doesn't take a lot to offset the low score, but if you never do anything to build your business credit, you're never going to get a good score. And you can have a bad score even if you have absolutely no credit established now whatsoever. Okay, so I'm trying to look and find an example of this, but I kind of have a little bit of an example. So in this case, we've got a company that has a good score of 91, being recommended for $5,000 in credit. But if we look at their accounts, they only have two accounts. They have a credit card and they have a packaging account. That's probably Uline. They have a Uline and one other account. Only two accounts reported gave them a really high score of 91. That's super high, okay? So we can also see here how low their scores were. They were as low as 19, 36, and then they got two accounts that report with positive payment history, and then that really helped bring up their score. So two accounts, a net 30, and one other credit card with a $1,000 high recently used credit gave them a score of 91. It doesn't take a lot of credit. One account can take you from a 29 score to an 80-90 score with Experian or Equifax if you pay it as agreed. But what's most important to know here is that you will be populated a credit report. You will be given a bad score even if you have no credit. So hopefully you got a lot out of today. I walked through and talked through really more than 12 reasons you want to build your business credit, and hopefully taught you a bunch of stuff that you maybe didn't know before you came in. What you do need to know is it's very important to build your business credit. And if you want to do that and you haven't started already, go to creditsuite.com/Facebook. We have a free guide that maps out the steps to build business credit. creditsuite.com/Facebook, and that will give you everything you need to build business credit. If you want to talk to us more about expediting the process, give us a ring, 877-600-2487, 877-600-2487. We'll talk to you how we can help you build business credit, or go to creditsuite.com/Facebook and get your free guide that maps it out so you can take this on your own. Whatever you do, work with us or not, build your business credit. Who wouldn't want access to super high credit limit accounts without a personal guarantee and without a personal credit check? This is what it's supposed to be like, right? Our business is supposed to help us fund our business. We're not supposed to personally fund our business. Consumer credit was never designed to fund a business. It's what business credit's for, and you can get it even as a startup if you know the steps. creditsuite.com/Facebook, we map out those steps. Michael Moody, you're the bomb. Thank you very much. Thanks everybody very much for coming. I'm going to wrap this up. If you ever need help with building your business credit, let us know. Our website's creditsuite.com. If you go to the top right of our website, you'll see our YouTube link, our Instagram link. You'll see our podcast. We have so many different ways that we teach you how to build business credit to be successful. The one thing you don't want to do is ignore your business credit. It's a big deal. It will catch up to you, just as if you ignore your consumer credit will catch up to you on the consumer side. Thank you all very much. I will see you next Thursday at 11 o'clock right here on Facebook Live. If you want to follow what we're doing in the meantime, then go to creditsuite.com, top right of the page. Make sure you subscribe to our YouTube channel, like our Facebook page. We'll tell you when we go live. Find us on Periscope. We do all different kind of training on Periscope. We're on Instagram. We're all over the place. And if you go to creditsuite.com/Facebook, we will send you ongoing information that will help you get business loans and get business credit, even if you think you can't qualify. So thank you so much for coming. I know how valuable your time is. Hopefully you got a little good information. Raquel, I appreciate you starting today. Edward, thank you very much. Thank you all for coming. Thanks for the likes. Thanks for the loves. Thanks for the shares. It really means a lot. I will see you next Thursday at 11 o'clock Eastern here live on Facebook. Thanks everybody. Have a great week.